Market is getting decently oversold here, and we've had 4 straight days of selling. So we're due for a day or two of rally. That may be very truncated. We may get a rally today, close the market out positive today, maybe move back up towards this 50-day moving average. But then if Nvidia lays an egg tonight, that could certainly weigh on the markets tomorrow. Here's what you need to know before the bell this morning. Yesterday, we took out that 100-day moving average. Now, this is the one thing we talk about: stop losses, and be very careful with how you use stop losses in your portfolio. Do not react to an immediate break of your stop loss level. Let it mature. In other words, give it some time to see what happens. Yesterday, we took out the 100-day moving average, and a lot of stop loss levels were triggered, people selling immediately. By the end of the day, the market rallied back above that level and closed above the 100-day moving average, reverting that stop loss. So again, you want to give your stop losses some time to mature. Let them season a bit to make sure that that stop loss level is actually taken out. Because again, yesterday we saw some very, very good buying in the afternoon, push the market back above the 100-day moving average, and this morning futures are looking positive. Now again, I would still sell rallies right now if you need to reduce risk and raise some cash. You're sitting right below the 50-day moving average. That's going to pose some resistance today. And then above that, you've got the 20-day moving average. Market is getting decently oversold here, and we've had 4 straight days of selling. So again, we're due for a day or two of rally. Again, that may be very truncated. We may get a rally today, close the market out positive today, maybe move back up towards this 50-day moving average. But then if Nvidia lays an egg tonight, that could certainly weigh on the markets tomorrow, and then we come back and retest or potentially take out that support level. We are in a corrective process. So again, this is going to take a little bit more time for us to work through, but we're on a sell signal. The market is working through a corrective process. We're still trading within a very, very broad trading range. And again, this range runs all the way back to mid-December. But we've just been in a big giant channel here now for about the past 3 months. It's been kind of aggravating at this point because you're not seeing a lot of gains, seeing a lot of rotation within the markets. We've seen value now outperforming growth. We've seen that rotation. We've seen bonds. Actually, if you didn't know this, by the way, bonds have a larger year-to-date return right now than the stock market. Been a good rotation into fixed income as well as this kind of risk-off trade goes on. But again, there's nothing wrong with the market here. There's nothing that suggests we're about to go through a much more deeper corrective cycle at this point. We are just in this consolidation process, working off those previous oversold conditions. Now, again, that doesn't mean that we can't mature into a bigger corrective phase. And so we certainly want to watch these support levels. We want to pay attention to these support levels. They are important. But again, at this point, don't overreact and get too overly negative in the markets, because again, there's a lot of stuff here that can drive the market short term. Nvidia after the bell today, up, or that could be positive or negative, and we'll certainly talk about that tomorrow. That could certainly set the tone for the markets over the next couple of days in particular. But again, just use today's rally. If you need to reduce some risk, rebalance ahead of the report tonight, whatever you need to do to hedge your portfolio a bit, certainly probably good advice here. And then tomorrow we'll pick it up from there and see what we need to do next. But that's what you need to know before the bell this morning. Here's what you need to know before the bell. It's not about eggs. All right, seriously.